Good afternoon and welcome to DCTV. This is your host, Jaime Garzaro. I know we're always busy, but also wondering what the hell is going on with Bitcoin. So I'm sure you're seeing in the news or YouTubers mentioning the weekly death cross that's approaching, fast approaching. And this week is supposed to confirm that indeed there's a death cross on the weekly time frame. What is that? In traditional markets, the death cross is when the 50 moving average crosses below the 200 moving average. And that is known as a death cross. Now, why is it weekly? Is because it's when it occurs in the weekly time frame. There's an hourly, there's a daily, there's a weekly, there's a monthly, etc. Bitcoin has never had a weekly death cross confirmed in its history, in its entire history. This week may be that exception. But what does it mean to you, the investor? I know we're all busy, and a lot of us have to make decisions, try to look on the side as we're working our daily lives to make a decision and then move on. So I'll try to keep it as short as possible and explain what this means. But it isn't as bad as it sounds. It's usually a confirmation of nearing a bottom. So we'll get into it. We'll dive deep, buckle up, and I think you will enjoy this show today. So I'll keep it brief as we go. So here we go. I'm zoomed in to the weekly chart, and in the weekly chart, you're seeing the following. We had a beautiful run up. Let me start when we took a dump with FTX collapse. That collapse literally brought us down and broke a level we had been using as support for a while. We did a formation where there was a bullish divergence that finally popped. In this pop, when there's a good impulse in the market where we believe it'll continue going up, we should see a lot of strength where there is very large candles all the way through. But instead, imagine a rocket going up into the sky and it starts slowing down. So instead of the initial speed, you start seeing it slowing down. That shows either there's a malfunction in the engine or the impetus is not as strong as we expected it. So in this case, you're actually seeing precisely that, where the volume is tapering off and we start slowing down. Here is that death cross that I'm speaking of. This red line is the 200 weekly moving average and the 50 weekly moving average coming down to cross below it. And you see Bitcoin's price start to stall at this point. Does this mean that we go all the way down, we go find absolute new lows? It is not. It can happen, but probabilities are not in that favor. Why? Because this was a very large impulse that we saw with volume. So it shows that there's a fight or a bottom being formed as we speak. Does that mean that my buy levels that I've set way down here are invalid? Not necessarily. But it's telling me, and this is not financial advice, please, this is just, I'm sharing my own experience and you do with it as you wish, but do not take it as law. All I'm speaking is probabilities, and that's what I'm sharing with you. In my case, I'm seeing that there is enough impulse, I'm waiting for confirmation, but there is a strong impulse up at this moment. I don't think the timing of the bull run is not here yet, especially because we have such a large resistance right above at around $29,000, which is where Bitcoin in the past bounced multiple times before it finally broke through. So we have quite a bit of resistance from the death cross point all the way up to 29,000, almost 30,000. So that's a lot of ceiling to go through. If we were going to break it, we should have kept going with a lot of steam going forward. It did not, it has not occurred. But it does tell me that we did have strength coming up. So we're now looking for a ultimate capitulation, or at least a bottom formation. What do we do now? Will this break up? It's highly unlikely. Why? So let's zoom in on the lower time frame. I'm moving us to the 3-day, which is usually my favorite lowest time frame. I'm a swing trader, meaning I buy and sell on the long term. I do not do day trading at all. I've done it in the past. It's just not my cup of tea. There's a lot of great day traders out there. Gareth Soloway is one of them that you can follow and learn from him. And also, Don Fran from the Don Fran Show is an amazing instructor in this field. Now, in my case, what I'm looking at is the impetus, the strength of the rise. It's not very clear here, but this is the RSI below that you're seeing on the bottom side of the screen. I'm going to reduce it to the daily because on the daily, it's a lot clearer to see than it is on the 3-day. What I'm about to show you is how the strength is slowing down. Instead of continuing strength up to break, you can see that Bitcoin's price, even though you see it rising, you see it going up, and then one more impulse higher, you see the price rising and continuing to rise overall. But look at the RSI, or the strength of the impulse, what it's been doing. We had the run up, and then we have a bearish divergence right here with that little triangle. And now we have a lower. Do you see the strength? It keeps dropping despite the fact that visually it looks like the price is rising. So this is a bearish divergence. It's when the strength starts slowing down despite prices rising. You see that clearly, and you can almost estimate the top of the bull runs when you start seeing divergences in that sense, where you start seeing the loss of strength. And that's how you know a trend reversal is incoming. In this case, because it's a lower time frame, we're not seeing a massive bleed out. We should see a pullback, which is a natural thing that should be occurring with the price. If it's too strong, too fast, usually the drop is just as strong and just as fast, or sometimes faster. So we have on the daily, we have a 200, a golden cross, meaning the 200 daily moving average is crossed by the 50 going up. So what do you look for at this moment? Well, for Bitcoin price to be healthy and start confirming a bottom, we should start seeing it come down and retrace in price. Now, in my case, personally, I'm now looking for buying opportunities where I can start entering Bitcoin as it comes down. Why? Because this previous impulse, which was about 6 months worth of accumulation, transforming, where there was a bullish divergence, even though prices was going down, it just popped. So it shows that there's a lot of pressure and a floor starting to be formed. The big question is, will it be a double bottom where it goes down as far as we saw it last time, around 15,500, more or less? Or will the bottom be higher, or will the bottom be lower? There's nowhere to tell where it will be, and thus my decision to start entering. So I have a certain amount of cash that I'm going to divide into 6 pieces. So wherever it stops and starts reversing, where it starts forming the bottom of the market to then enter into the bull run, I will have 6 levels. How do I choose these levels on this retracement? Well, that's where I go to the monthly chart. So let me jump over to the monthly chart, and this is the monthly chart we're looking at. You can see how beautiful we had a bullish engulfing coming up, where the previous red candle, the next one, which was last month's, was a massive run up, and look where it stopped. Incredibly, or maybe expectedly, I honestly, I didn't think it would go up to the 50 moving average in one single candle, but that shows the strength of the candle itself. Is it ran up from the Luna collapse right here, It had December as a bloody month, and then this run up. This is a bullish engulfing compared to this previous candle, where it hit and even wicked just above the 50 moving average. This month, which is this red candle here, we rose slightly higher, but are holding below it. So it seems that the 50 moving average on the monthly is going to hold as resistance. How do we know, or how do we suspect? It's not guaranteed, but we suspect it's going to hold because of the loss of impulse that we are seeing on the daily and also on the 3-day and the other levels, and the death cross coming down. Usually you'll see the death cross almost at the bottoms of the markets. And in this case, it's a pretty large one that never occurred before on the weekly. Now, where do I find my buy levels? So I'm setting buys. Of course, the big ones I'm looking at are 19,500, which I've been watching from last year. If you look at the videos I've done and this analysis, I've had buys at that level. And of course, the absolute sweet spot for me is the 13,800. Why that one? It's because it was a full open and close of monthly candles of the previous bull market where it topped out. So I'm looking at that as a 13,800 as the range. Of course, as a trader and as a speculator, I try to set other Hail Marys below it. So the way I'm choosing is I'm looking at the open and closes. So you'll see a one around the 20,500 mark. I'll see the 19,500, which we used as support for about 6 months. I'll look at the bottom of the previous two candles, 16,400, and so on and so forth. So that's how I break up my buys into 6 levels. Well, I drew them out. I just didn't want you to see a chart that was too messy, but here it is. I'm going to show you my current levels by levels. And remember last week and last month, I was notating that I was mentioning that I was looking at this level as a support, which is around 21,473. We may pull back to that, which coincides on the daily. Let me move it back to the daily. Here's where the 200 moving average is standing at. It's around 19,700. If I come back to the monthly, share this tab again, we're looking at around 19,000. So it's where FTX imploded. It's around that range level. So I'm choosing these buy zones within those ranges. So I have the numbers here on the right are anywhere between 21,473, 19,500, 17,222, and it's all based on where the monthly candles open and closed. Those are my monthly levels, and that's how I'm looking at it. Of course, I have it all the way down to 7,700, but we'll talk about that as we see Bitcoin breaking down if it goes this far. There's no guarantees that it'll go this low, but this is the time where miners, people that are in the industry, building for the industry, these are the times you're looking for to start buying either Bitcoin itself or the Bitcoin miners or the assets themselves and start building and preparing for the next bull run. So you lock in your prices of the ASICs at the all-time lows. So you enter slightly de-risked because the asset itself, as Bitcoin rises in price, the miner itself also rises in price. So this is why you look at the market conditions before you enter, to avoid situations like it happened with Marathon and so many others that continued signing contracts with Bitmain and other suppliers at very high rates, thinking that the market would continue up forever. You want to avoid that. You don't want to enter when everyone else is entering. Right now, if Bitcoin pulls back, you should see a lot more fear in the markets. But people who have been in the industry long enough know this is the time where you start stepping into the market so you can get it at the best prices possible. How do you lower the speculative decisions? Is by doing your research. Understand Bitcoin. Why is the oil industry? Why are so many industries looking at power industry? Are looking at it to solve problems. It sounds counterintuitive because you just look at YouTube and so many people are saying, "Nah, it's consuming too much power." You just hear negatives without them understanding that actually it allows power companies and oil companies to leverage it, where by processing transactions during the mining process, it's actually generating revenue at a time where now they can reinvest it into their infrastructure. So when there's low demand, where does that power go? Well, if a miner's consuming it, they're getting paid for it. So now they have revenue in high times and low times. And the miners are that vehicle that allow Bitcoin miners that allow that advantage, that line of sight to profitability. Beautiful. So this is the summary of the market. I hope this helps. Post any questions below. And like Brandon and the entire TAMP and the entire team, we do this because we've been part of the decentralized community for a long time, for years now. And just as it helped us during when we were noobs, we're trying to share what knowledge we do have in the industry to keep you focused and moving forward. So we'll see you next time. I'm aiming to do this every week, and we will keep you abreast of where we are on everything. Have a good one. Stay calm, huddle on, start setting your buys if that's what you wish to do so. Speak to your financial advisor